Hit a boo boo. You got to get the pip. Big biscuit. G'day, mate. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Hello. Jumbo. Guten Morgen. G'day, mate. My name is Wayne McDonell. Namaste. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. If you have yet to join the family, please do. Visit TradersWay.com. Open a demo account. There's a little link to these webinars every morning through the back office. Just go in your back office and just click live webinars. Boom! And you're here. Please join the family of Forex traders at TradersWay. I do these sessions 7:30 a.m. New York time, a couple hours before the New York session opens. It's approximately London lunch. Good time to get together with the community, share some trading thoughts. Oh, I didn't click the share screen again. Boom. So this is Aussie dollar. It's just where we left it. So if we go, I don't want to talk about that, but you can kind of see we had a trade plan. Yeah. But I want to talk. Let's talk yens. So the world is freaking out, right? Am I right? The world's freaking out. Stock market's down 5%. Nobody knows why. Maybe it's hedge funds. Maybe it's high frequency traders. Or let me throw a hypothesis out there. This is the yen move that I talked about 9 months ago, 6 months ago, 3 months ago, so on and so forth. And that this is supposed to generally continue until April 1st. Right? December rally. January opens with downward movement in the yens. Then there's a false rally. And then it falls until approximately April 1st. That is the plan, isn't it? Good job, Russie. But how many people can confirm that that is the general plan that we've had for at least 6 months? Maybe it's just that coming to fruition. Or it's a lucky move that yen across the board. I mean, this is it, isn't it? There's the December rally, the Monday after non-farm payrolls in January, then the false rally, and then the drop. I mean, that is the exact prediction, isn't it? Right? So I don't know. Anyways, I think now we can call that high five. I think now we can call it. We weren't sure in here. I said, well, we shouldn't really call it. We had the up, the down, the up, and then the down. It's like you don't really get the victory lap until you make the lower low. But I mean, that's double funk, boom, right? Double pump, belly bump. Yeah. That's cool though. 6 months in advance, 8 months in advance, 9 months in advance. Cool. And the interesting part about this is it's all seasonality, in my opinion. So we didn't get this little false rally and drop. It just went ahead and dropped. Cool. Right? End of the year rally, beginning of the year drop. Third week, remember we're talking specific weeks now. Third week, false rally. And then a very significant drop till April 1st. Cool. It's another one. It's funny how it'll sneak up on you even though you're waiting for it, huh? You're sort of like Elf. You ever see the Elf movie? And the elf is sitting there, and the other elves at the toy factory at the North Pole, they don't know what to do with him because he's such a screw up. So you put him in the little. He's doing quality assurance with the Jack in the Box, and it scares him every time. Then every time he puts it on there, yeah, that one works. Puts it over to the side. So anyways, you're sitting there waiting for the inevitable, and then it just sneaks up on you. You're like, wow, surprising. So anyways, and Euro's the toughest one to deal with because Euro's the strongest. Morning, Ryan. So yen rally at the beginning of February, very cool. Now, if the yen stays strong until April 1st, then I'll be a very, very lucky dog. Okay, cool. Okay, so we'll go through this. I need my glasses. I need my glasses. Don't click that button. You guys are stressing me out. I'm trying to go fast and it messes me up. All right. Okay. Yeah. So where do we want to go from here? I guess we should do some commodities. Okay. Not the big, right? Not the big move that you would hope in this situation, right? It's not a ginormous move in gold here, in my opinion, relative to what's happened. So we'll have to keep an eye on this, right? But typically, if the dollar is strong, gold is weak. If the dollar is weak, gold is strong. Not always, but generally, the anti-dollar. So if the dollar is strong, then this should move down, could move down. We already had it drawn to do this, so no major surprise. But we didn't even really get down to the real support, huh? So the question, like if you were writing a thesis or something, the question is, What does it mean? Why not? And look back at this move that occurred overnight. Look back at it and then see if you can explain it. You can say, well, why didn't gold move? Is it not? Are they not related somehow? And why are they not related? Right? Just go through it and think about it. Well, James, if you go back like 10 years or 15 years, you might say Aussie and the Aussie dollar and gold would be related. That may or may not still be true. But the Aussie dollar is a commodity currency. Gold is a commodity. Australia has a lot of gold and it exports a lot of gold. But so does the South African rand. Right? There was a time when the power would go out in South Africa and gold would rise like $5. I don't know if that's true anymore. But there was a time when South Africa had a lot of trouble keeping the lights on. We're like, oh, the lights went out again. Really? Yeah. So I'm just wondering if it's politics is doing it. Cool. So anyways, very nice. Is Travis here this morning? Travis? Travis? Maybe Travis is tardy. Yeah. How about Buckner? Buckner, are you here? Miguel. So look at this move. Boom, boom, boom. All the way down, hitting targets already. Okay. Oh, hey, Mike. Thank you very much for the cigars. I appreciate it. Big hug. Come to Papa Bear. Thank you. Oh. No. Thank you. I appreciate that. Look, it arrived already. Ah. No, but yeah, I'm just trying to grow a little pot, and then I'll buy something extraordinary. So all the contributions go in. All right, so here's the move on oil and such, but we're now in a difficult predicament. The difficult predicament is now that it's happened, how do you jump on? And it's easier said than done because everything's going to be oversold, let's say on yen pairs, right? You're going to have to be smart with your timing, like around market opens, London open, Shanghai open, New York open. You're going to have to accept some volatility. And if you're jumping on the moving train because the train's already left the station, you better be careful with your stops. So you got two choices, and it's not always clear which one is the correct one. The first choice is to have your stop really close, right? Or the second step is to have a very large stop. By very large, it could be like 150 pips. And you say 150, well, then drop your lot size. But it depends on how you want to participate. I think you're going to have to use price action on smaller time frames. Okay. Okay. Smaller time frames. You're going to have to pay attention to key levels like role reversals like this, but very often you don't get there because it's aggressively moving in one direction. You should pay attention to key psychological levels like let's fuck this one up. Like 6300, where we are now. That's a key one. Pivot points, obviously. Yes, Stuart, of course. In fact, my book from many years ago, they're all daily pivots. But I think some of these moves here, like this one, didn't I draw this arrow in non-farm payrolls? Sibo, I don't use yearly. I'm not saying they work or they don't work, but I don't use them. I'd rather use fundamental analysis. If weekly M1, but on monthly, it just well, Martin, you're actually talking about two things. You're talking about different cycles. So what you're probably going to see in a typical market. Now, look, this is not a typical market. This is a true fundamental breakout, right? So you got to be careful. But let's say all things being equal, in the scenario that you're describing in the chat room, what you would see is a short-term rally and then a longer-term drop. So you would take profit or take some profit if you wanted, depending on what your strategy was. But you should expect it to rise a bit. We don't know, right, what a bit means. And then all the way back down to the monthly target. Yeah, no problem. Brooks says, how about a choppy couple months like a consolidation period? That generally doesn't hit until summer. We're going to hit April 1st, and then I'm going to prepare for a moderate rally, and then probably a moderate retracement, and then the consolidation. Right? It's sort of a nice wave that looks like you're going to surf it, and then it goes blah, it just falls flat on the beach. So, but anyways, yeah. So you can see this is very interesting because I did this arrow here on Friday, which was based off the predicted pivots and such. Very interesting. So if you zoom in here, this top, sorry, wrong one, delete. Maybe we should do this. This high, I guess we'll do that. Bear with me. Bear left, right, frog. That's the best movie, I think, one-liner, if you want to call it, ever done by Hollywood. Yeah, totally the Muppets. So here's the situation. You have Fozzie Bear and Kermit the Frog driving in a car down a road, and they come to a fork in the road. Right? And Kermit the Frog says, bear left. Get it? Bear left. And he says in back, right, frog. To the frog, right? Bear left to the bear, and then the bear says, right, frog, to the right, right? And then he, of course, takes the left at the fork. But you're like, it's brilliant. You know, it's just brilliant. Yeah. Morsky. All right, so anyways, yeah, cool. Nice. So that's set up off these pivots, right? This pivot predicts that low, and so on and so forth. But don't get caught up now on the technicals, because you know we're going to get, in some cases, illogical moves. And remember, technical analysis is logic based on some sort of rules, right? But if the market is freaking out, you know, forget your rules, right? All hell breaks loose when first shot is fired, right? So you got to save yourself because the market is in panic mode. So we can go a little bit farther than normal, but we can also have quicker snapbacks. So we were talking about, you know, if gold isn't moving as much relative to the currency markets or to the stock market, then what does that mean? And if we don't know now, well, in the future, at least come back and see if you can figure it out. But maybe the stock market is disconnected from the overall market. And by overall, I mean aggregate global market for everything. Just think of like global GDP, right? Global GDP is made up a lot of things, right? A lot of components. And let's say just the stock market is just a sort of a smaller piece of the whole. So if the stock market is just overvalued and it's a great time to take profit at a predictable time of the year, since I predicted it 6 months in advance, right? Obviously, it's a predictable time of year for this to happen, so it happened, great. But does that mean buyers buy back in if it's disconnected, if it's just basically profit taking? What we don't know, and this is kind of what I was suggesting in the past too, is you could take money out of the US stock market because it's profit if you bought 1 million years ago, like at Dow 8,000, and then you sell it down 25,000, you're going to be fine, but you're not going to clear the board, right? So what you do is you take some of this new dry powder and you put it in Europe instead. Because why would you buy Apple now, especially if you already own Apple? Like, why would you buy more Apple? Oh, because I can buy it 8% cheaper. Well, you could also buy like a Dutch company that will double in price in the next 10 years. Yeah. People love Buffett, huh? It's the best marketing I've ever seen. But I think in real life, he's like the, what do they call him? Is it the Emperor that Darth Vader bends on one knee for? What's his name? Is it not? It's the. But what's his title? I don't know. But he's Emperor, isn't he? Or I can't remember. It doesn't seem right all of a sudden. It is Emperor, right? Like he's the old powerful man that could destroy you with the snap of his finger, and he probably will. Right? You guys are too young, man. Sith Lord. So, anyways, I think Warren Buffett would break your back purposely if it came down to a business deal. I've read enough in finance books and stuff, like when he shows up, When you need money from him, it's going to be a bad day. When you need Buffett to come in and save you, it's going to be a very bad day. You're going to bleed and bleed and bleed. So anyways, he's okay. So like all these things, like what do you do when you're up here? You got to be careful is the true answer. Okay. So this might be a great exercise for you to really practice price action on smaller time frames. Move your stop, or at least think about it like, do you want your stop here? Do you want your stop here? Do you want your stop here? Keep your lot size relative, right? And you're more likely to survive with bigger stops. So you might want to use smaller lot sizes and have a stop here and then lock it when you can. And see if you can get lucky even, like just jam stops and let it run. Or like I said, just treat it like a swing, drop a stop, take a walk, come back in 3 hours, you might find you're up 100 pips, move your stop to break even, and then don't be surprised if you get knocked out at break even. Right? So here's a good example happening right now. Right? Roll reversals and pivots. Okay. If the dollar's going to remain strong today, you'd think that would work, right? So your stop could be like, you put something there, and then now your choice is going to have to be, oh, come on. Do you want your stop on just above that, or do you want your stop above that? You can see it's not even a lot of pips because this is a 5-minute chart. Okay. And so the general plan here is if the US dollar is going to stay strong, you have the low, right? Lower high, lower low. Okay, you see there's support here, right? So it's all very predictable moves. Lower high, lower low, probably have a hiccup here. And this is the bigger lower low, so you might get a bigger lower high, you might get a 3-wave correction and then down. I'll mark that just in case I miss it on a different time frame. Yeah, Russell or James, don't rely on that too much. At some point, you're going to need to learn how to manage your risk. Okay, so throwing down 150 and trailing them and sitting back and relaxing, your job isn't to sit back and relax. So if your job was to manage a portfolio of many millions of dollars of clients' money, they pay you to not relax. So at some point, you know, just right, throwing away 150 pips is irresponsible. So if it gets you into a trade first where you throw down 150 and therefore your stop is, or your lot size is small, that's good. So you're in and stuff. But at some point you're going to have to get rid of the trail. And you're going to have to manage it. At some point you're going to need to make a decision. Do I move it to stop? Do I move it to break even? Yes or no? Do I lock in some profit? Yes or no? Okay. So I'd rather you just throw down like, you know, typically what I would do in a scenario like that is I throw down a 150 OCO, and it gives me plenty of time to decide later on how to manage it. So I know my risk. That's all calculated because it drops the OCO. Later on, I could, if let's say I can move my stop to break even fairly quickly, I'll say, wow, I really caught this well. So I might move my stop to break even, but then I might move my limit from 150 to 250 or to 178 based on a pivot point or something, right? And so I'll manage it depending on how the trade develops. So I'd rather you know, drop an OCO than just a trailing stop. Okay? So to me, trailing stops are sort of like training wheels. Okay, so it's good in the beginning. What you're doing is certainly not wrong. Throwing down a bigger stop with smaller lots and trying to let it run. That's fine, but just don't do it always, right? Because the easy thing to happen is like, oh man, I did so well in this period, so and you convince yourself that's the right thing to do always, and you end up doing that always, and you'll find, my experience has taught me, you will find that that doesn't always work best. Okay, in a high volatility market, maybe that is true. Maybe it might be, but how about this? Like, if I had 25 pip stops and you have 150 pip stops, how many shots do I get at a trade? Well, you only get one. Well, I can lose 25, 50, 75, 100, 125, 150, right? I could take 6 jabs at this setup for the same amount of risk, and I bet you I can make more pips. Because this was risking less than 25, right? So look at this. I'm already at break even if I wanted. So what I shorted, what? Right, so anyways. Yeah, I'm going to move it there, though. That's just too quick. All right. All right. No, that's my stop. Joe Bird. What were we trading? It was Aussie, right? So my short is here. So I have a stop here, and then if you want an OCO style trade, I could take my entry and I can move it here and say, now I have a stop here and a limit there. So I'll lose 10 pips or I'll make 30. You go to Amelia Island? I go there often, actually. It's not actually my favorite Ritz-Carlton, but it'll do, pig. Oh, you're in St. Augustine? Cool. Nice. I've always actually wanted to go there, and it's always so close. The oldest city in America and all that kind of stuff. What's the big beautiful old hotel there? Okay, I want to go there. Do they have a cigar bar? Probably not, huh? Downtown? Yeah, downtown's really pretty, right? Down by the marina? No, well, if you're there, I'll call you up. I'll ring you up, seriously. That's cool. And then you want to golf at Sawgrass? Do you golf? I want to do a stadium course, obviously. Yeah, do you know people? I don't think I can just walk on and say, yeah. Yeah, I want to stay. Really? Damn. Oh, forget it then. Maybe I can barter. I'm like, really? I can do Pebble Beach for 300. Yeah, I know. Like I said, I like making money. I hate spending money. All right, boom, 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 boom. That would be killer, though. I'm telling you, that would be killer. I can get deals through my credit card, though. So we're just watching this live trade, right? Oh, yeah. I forgot. I'm already on this trade. So I shorted it 2 other times. How many trades does this account have? All right. So I'm short up here too. So I guess I'll move my stop to break even. Nah, lock in. So I'll double lock. And just one piece of advice, what I do here is this stop, the closest stop is for the closest trade. The farthest stop is for the farther trade. And I like to keep them organized, right? Because let's say I want to move the second trade to break even. Which stop is it? Oh, it's this stop. I'll move that to break even. And then I'll lock these in, and it's so 75 pips locked in on the top one, break even on the second one. Cool. James, are you super rich and highly educated? Oh well, there's always time, James. There's always time. You gonna pull up in a Harley? Potato, 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 potato. A Range Rover, a yuppie. Oh, what? Oh no! Yeah, it's white, huh? You're driving a white Range Rover? Oh, nice. No, they're lovely vehicles when they're not in the garage. There you go. Yeah, that's right. Cool. Yeah, I'll call you up. I'm not going to go to concourse, but it's hard with school now. Oh, speaking about school, guys, I got into that weekend, whatever you call it, course. So I'm going to spend, I think it's 3 weeks from now. I'm going to spend the entire weekend with a woman that's worked her whole professional career at the Fed, at the Boston Fed and the New York Fed. I'm going to spend the whole weekend debating with her the minimum wage, whether minimum wage works or if it's harmful for society. How cool is that? Yeah, well, so I'm, by the way, I'm very open-minded when I go in these things. Otherwise, I'd never learn. I am opinionated, but um, I'm always open-minded. But I can show you as an economist, right? Price floors and price ceilings, and that they alter the market from equilibrium and will either create shortages or surpluses that are unhealthy for the overall market. So I can show you that on a piece of paper, that when the government comes in to try to do something good for the people, it screws everything up and the people are worse off. That's what I've been taught. I can draw charts and graphs and move this and move that and then say, well, here's the equilibrium price, but then here's the market and here's the supply and then there's this and this is the shortage and this is blah, 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 blah. I can do all that. So, right? So I'd like to hear the other side. So in the United States, you know the number one indicator of your the number one indicator for showing that you'll have a longer life, a healthier life, a wealthier life, what's the one thing that you can do that will dramatically, like, double your chances of living longer, living healthier, living or wealthier? Well, yeah, but how do you do that? So how do you what's the one thing in the United States? It's education. You can just separate the two. So one of the things we're studying is the 1% and the 99%. The 1% is not actually that big of a deal, that the super elite wealthy are getting super elite wealthier and they're doing it even quicker. That only becomes a problem when they start manipulating politics, or they own a company that is now so big and so powerful that they've become like a monopoly. That's bad, because we need competition to have better quality and lower prices, right? So if they're so rich they kill competition, or if they're so rich they manipulate government to their own will, which means the government's not looking after everybody, which means, so those are both two little monopolies, right? Okay, so that's bad. Okay, but that's still rare and not that easy. But if the 1% gets to that point, then it is a problem. You know what the real difference is? It's the 25% that have education, and their income levels have been going up. Their life, the length of their life has been constantly rising over decades and decades and decades. Their income, all this kind of stuff, right? It's decades long trend. Because it used to be, if you could read and write, you could get a decent job. If not, you're in the coal mine, right? And then in sort of like the 50s and 60s after World War II, you kind of had to go to high school, get your high school degree. And of course, if you were super wealthy, you went to Harvard, right? And then it got to more like the 80s and 90s, and in particular the 90s, like, dude, college is minimum. To even just get a job interview, if you haven't graduated, people are like, I can't hire you in my laser mini diode factory. I'm not sure if you know how to use Microsoft Excel, right? So you had to have a college degree just for that. And now we're at that point where it really is like college degree is almost pointless, because now you're going to need more than that, right? So what about the dude with the tat on his neck that didn't complete high school? My kids at school, everyone's got laptops. They're in 5th freaking grade, right? So what do you do with the ones that like don't have laptops, don't have internet connection, mommy doesn't drive them to science Olympiad practices, daddy doesn't drive them to robotics tournaments, right? All this kind of stuff. Like, there's a huge dichotomy. But the interesting thing is you need more and more and more, because the jobs in the United States are getting much more complicated. And you have to be wicked smart. So it's the shift of the top 25%, because that means the bottom of society is the vast majority. Like almost 2/3 of society is effed. They're like walking zombies, right? Right? So you get the guy that works at Taco Bell, and he walks across the street, gets a $5 haircut from the hairdresser, and then the hairdresser walks over and has lunch at Taco Bell, and it's a symbiotic relationship between the two. And they're only supporting themselves, and breathing my air. James. You can just see James in his white yuppie mobile getting hot sauce on his khakis. Oh, these are my best khakis too. Or is it chinos and performance fleece? Yeah. All right. Too much picking on James. Cool, James. I'll call you up, man. We'll definitely smoke cigars in St. Augustine. I just don't know when, but we'll do it for sure. Is it Amelia Island? It's okay. Actually, you know what? The cigar bar at Amelia Island is kick ass. I go there all the time when I'm in town. I really like the Wagon Wheel. So if you know the Wagon Wheel, it's awesome, actually. Yeah. It's one of my favorite cigar bars in the whole world. It's amazing. Now I want to hang out with my mother-in-law all the time. Omni. Oh my God. Oh my God. Ugh. Yeah. The Omni. Oh, I'd rather die than sit. Yeah. Okay. Boy, this one started out so nice for us, and then whoop, it's over. Whoop, there it is. It's too bad, huh? I mean, I caught this whole red move, and then wah! Got my head chopped off. Happens. Okay, let's go back. Let's do 15. Come on now. I guess I got to do hour. Okay. So this says it could go up quite a bit, right? If we get through this line, this could go up quite a bit. By quite a bit, I mean, let's try to find that fib. Funny, the fib's right on it. All right, well, let's do this. Get rid of it that way. Delete. There you go. So this is now saying, since we got this fundamental move, if we get through this gray area, the next challenge is there, and then the next challenge is there. But don't be shocked if we're up here in the future. Okay. Oh, I love peso. I love it. But to me, it's just like going to the piggy bank, right? So like I shorted this, right? Made money. Shorted that, made money. I love it. But I guess I love converting it. Right? I love converting it into something else. So, you know what's interesting? So I'm trading Turkish lira, and I had an opportunity to go to Turkey that it kind of fell through last year, but I guess I got to go to exotics. And I was really bummed out that I didn't go, and I told my wife about it. She's like, Turkey, is that dangerous? Only if you're American. I'm like, Turkey? Oh my God, Turkey's awesome. What are you talking about? You know, I want to, right? I'm like, there's Istanbul, and then you go out some beach somewhere, and they have the most beautiful, beaches ever. And then I showed my wife like a travel show of Turkey. She's like, oh my God, that's beautiful. I'm like, yeah, it's totally awesome, right? So it's been coming up in conversation, let's say the last 6 months or so. And then they advertise like crazy in Super Bowl, Turkish Airlines. And then I got Business Week the other day, and it also had a Turkish Airlines ad in it, and also maybe The Economist. Somebody's advertising like crazy, huh? Yeah, Katie. Yeah, I think the world's going to change in the next 100 years. Our social experiment is, failed in the Soviet Union, failed in Latin America, um, you know, failed in China, right? The socialist part of their communism. So now the world has really kind of figured that out. And I think in the United States, a lot of the social experiments that have been going on since the 1950s and 60s needed to happen because the country was pretty much messed up in many ways. Like women weren't working, races weren't mixing. But in my opinion, it's failed. So a lot of these things are going to change pretty quickly, and then we'll enter sort of a new modern age, but at least the socialism part has failed economically, and that we're eradicating socialist, maybe, right, ideas globally. But then you start looking at, well, Trump kind of talks about closing borders and this Brexit thing, you know, that you can't call it socialism or socialist, but it's not open market like it's supposed to be. So we'll just see where all of this goes. But I think it's a very interesting time. So, 100 years after you're dead, I think people will look back and see our lifetime as a period of maturity, I hope. But I think we're in a turning point. All right. So speaking about lira, so while this dollar stays strong, while we're on a fundamental move here, uh, I need to go from dollar bearish to dollar bullish until something technically tells me things have changed. Okay. So yeah, so I don't know where the world's going to go, but we got to get rid of silly things like racism, like that shouldn't exist. Um, Sexism, that kind of stuff, all needs to go away, right? You fondle a woman at work, you get fired, and then somebody beats you up in the parking lot, I think is what should happen, right? So we need to move on because that reduces productivity. Productivity lowers income. Income lowers quality of life, and it ruins it for everybody, right? So we just need to move past all of that. But to dictate your wage, like it's unfair that someone makes more money than somebody else, that's socialism, and that's dumb. So we'll see. We'll see where that goes. Maybe my point of view will change, and by the time that March comes in, I'll say maybe everyone should earn a wage. But you know what? I've been self-employed basically my entire life. I might have had 2 jobs in my entire life where I actually earned a salary. Um, I've never had a wage. I could work 40 hours a week and lose money. Yeah, that's true, Ryan. As an entrepreneur, like 40 hours is stupid, actually. You're right, Ryan. That is so ridiculous. You know, 80 to 100-hour work weeks, especially when I was a younger man, was absolutely normal. And I loved it, didn't complain about it, all that kind of stuff. Yeah, actually, it was a woman, Ryan. I don't know if that part came out, but that manager that was female. Probably because there were no rapists in the office by then. So anyways, she was a tough cookie, so I had to get to work for her. So anyways, you know, these are, I'm trying to show you dollar moves here. And I want you to bear in mind, I've said it a couple of times, it was worth saying again, these are not technical moves. These are fundamental moves mixed in with some fear, right? So you need to be very careful the way that you trade. I would encourage you not to trade against the trend, whatever you recognize the trend to be. Just ask yourself, what is happening? Where are we going? Look at the intermarket. Like if the stock market keeps falling like it fell yesterday, well, maybe the currency market will do the same as it did yesterday as well. Or if the stock market rallies and now we're up at 500 points by lunch, by noon, right? Well, then maybe you'll see the opposite of what happened, right? So just kind of look at the correlation. What happened yesterday? How did that affect currencies? And then what's happening today? Is it the same as yesterday? Or is it the opposite of yesterday, right? And then try to correlate this, right? Like be a little smart. You're going to have to look at other markets. You know, and then manage your risk. Realize that there's an opportunity to make reward here, but there's risk involved. So, you know, it's an opportunity to behave like the trader you want to behave like one day. Okay. So anyways, what did you think of this trade? You saw how I entered this, right? Up, back into the role reversal, put it right, and then we moved the stop and all that kind of stuff. Yeah, that's what you need to be doing the rest of the day, just over and over and over and over and over and over and over again. If you like Fibonacci, you'll do it this way. Okay. If you like pivot points, you're going to pay attention to this line, which is between the 618 and 50%. If you like price action, you're going to use the gray area. But regardless, if you're going to trend trade, you're going to get some version of this. Okay. And then we got to check the next level here. Huh. Where's the next level? I guess we got to do this. Well, I'm going to really zoom in here. Okay, that says, what do you want to call that? 1618. That means it's telling me the 382 will hold. Now we're reading a lot into this. It doesn't really matter that much, but that's what it's suggesting because the 382 predicts the 1618. 1618 is the longer term target. I already have a take profit down here at the 1382, but if I short it again for a third time, it would project a drop to here. So I can adjust this from here to here if I wanted to, right? But then remember, I have to cover the spread on the short, right? Because there's a bid and ask on the spread. So I would have to actually have it about here, because then when price comes down to here, right, the bid's got to take me out. Okay? So your stop in this case on the way down has to be higher than the actual price you want to get out, because it's price plus spread. So when price is here and it'll take you up. I think you get that. You should get that by now. And if you don't know, if you're worried about that, like if I'm shorting something, what I typically do is I go to properties, I go to common, and I throw down the ask line. So it's got the bid and the ask line. And you'll see the red line and the blue line. So it's the red line above that's got to hit my stop on the way down. Okay? Yeah, that's right. That's right, Katie. But what I'm reverse engineering this, and it's a little bit dangerous, of course. I wouldn't read too much into it. But if my logical target based on price action, so I have to go all the way back to like this 4-hour chart and say there's something way to the left that will act as support. Okay? I'm going to assume everybody in the market sees that, which means they're going to sell all the way down to that point and then take some profit. So we're going there is my mindset. Now, I don't know if we're going there, but that's the general idea, right? So if we're going there and everyone else sees that and everybody else knows that and everyone else is smart and informed and using Fibonacci, then they're like, oh, well, I'm going to sell the 382 because they know we got that much space left on the chart, right? So they'll sell the 382 because we're on our way to the 618. They're still confident, they're still aggressive, and they'll short sooner than later. Now, do I actually know all that? No, of course not. And would it matter if you sell the 382 or the 50% or even the 618? No, it wouldn't matter in this levels. But, and in particular, we're looking at a 5-minute chart, right? So now this is definitely a scalping chart. If it was a 4-hour chart or a daily chart, there's probably more truth to it because there's going to be less volatility in that sense, right, per candle. So generally selling near the 382 to get us generally down to the 1618 is probably an easier thing to pull off, where this one you could be off 3 pips and you're like, whoa, Wayne, that's not a 382, that's a 50%. And to me, it wouldn't matter. What matters is you've decided whether you're going to sell or not. And to know if you want to sell or not, you kind of have to have an idea where it's going. Whoop. That's where you say, hoorah! Cool. Oops. So this idea of starting a hedge fund as a team, running a team fund, how many people would put in $5,000 or more into a trading account to do this? You'd be a part of a team. I am the manager. I come up with the strategies and all that kind of stuff. But you need to be the portfolio manager. And like maybe we do this for 2 or 3 years so that you actually have you can say I was a portfolio manager of a team of over a dozen traders. Here's my individual return. Here's my team return. This is what I was doing. This was the strategy I was responsible for. Oh, there's no trial run, James. Okay. But the thought is, so our fund would consist of like a whole, like, I don't know, 50 grand or something, right? 50,000 bucks. I mean, it's silly. But you could say, my thought would be, at least you could say, as a portfolio manager responsible for this particular strategy, my return was, average 5% a month or 60% per year before fees. But it would be, so that's the, James, you would be responsible for your own account, which means you're truly a portfolio manager. So like, James, I could say, James, you're going to be responsible for shorting the Swiss franc. You're running the Swiss franc ultra short fund. And that's all you do for the next 3 years. It's not, you don't have to like it, you don't have to dislike it. You're just the portfolio manager. And you're responsible to the team, to the company. So for example, as let's say I was the CEO of this hedge fund, and I talked to a billionaire client, and he's overexposed to the Swiss franc because he does a lot of import-export stuff with Switzerland. And he's like, yeah, so, I got a lot of exposure here. I need some short side to hedge. No, I wouldn't do it that way, James. I would try to bust it out so everyone has their own, right? But I should be able to say, okay, client, you got some Swiss franc you need to hedge. Okay, so I'm going to put some in James' account. What other kind of currencies are you exposed to in your import-export business? Oh, well, there's some rand. We do a lot of business in South Africa. All right, so some, and that kind of stuff. And then, overexposed to euro. And then, so that for that billionaire, I could say, okay, well, we're going to allocate out of the resources that you're providing to the fund. We're going to put 20% into Swiss franc. We're going to put 30% into euro. We're going to put 20% into rand, and the rest will leave in dollar denominations. Right? And all of a sudden, as a portfolio manager, bloop, $20 million entered your account, right? And you're like, oh, I got another 20 mil. And I say, make sure you deploy that, right? But that's how it would kind of work, right? In the real world, someone doesn't say, here's my 50 million, do whatever you want with it, James. Hope you make money. When you have big clients, they have sophisticated needs. They already have everything. They're already exposed to risk, and generally, a hedge fund is hedging that risk, right? So we would need something like that. Or I could say, if someone's investment horizon is 6 months and they're risk tolerant, I could say something, well, if it's the middle of summer, I'd say, well, we're getting ready for what we anticipate to be a big move in the Japanese yen pairs. So if your investment horizon is 6 months, why don't we look at the Japanese yen ultra short fund? We could also allocate some to the exotics, because if the macroeconomic conditions, that we expect actually arrive and we get this big macro move, not only will the Japanese yen weaken, but a lot of the commodity currencies should benefit as well, especially exotics. So we'll put you 80% into yen ultra short, and we'll put 20% into the exotics. Okay, boom, it sounds good. And they're like, yeah, I like that. But that's how it happens. You end up selling like products, if you will. Okay, so if you're running the Swiss franc ultra short fund, that's your product manager. You manage the Swiss franc ultra short fund. So what do you do when you wake up in the morning? Oh, I need to short the Swiss franc, right? You're not even debating anymore, like, oh, what charts do I start with? And am I a bull or a bear? And you pull out a piece of hair and you throw it into there. And, oh, I'm a bear today. No, you wake. What do you do? It's on your name tag. It's on your business card. What do you do? I'm short the Swiss franc. And some parts of the year you'll do better than the other parts of the year, right? You see what I mean? Because the Swiss franc might be strong parts of the year, so you'll have less opportunity. And then other parts of the year, it'll be weak and you'll do much better, but you'll be so hardcore picking the ups and downs that the people that want to be exposed to a weak Swiss franc will get that exposure, and you'll do well in the exact right moments that the market dictates you'll do well. And all of a sudden, your results will really, really dramatically improve. And then you can go to somebody and say, well, you know, for over 3 years, I managed the Swiss franc ultra short fund, you know, and we returned, 48% before fees per year. Average it out. We did it over 3 years. You know, there's business cycles and then there's calendar cycles and seasonality, all that. It's all mixed in. But, you know, we never had a bad month. Ever. Because I'm a wicked awesome product manager, right? Currency trader. So anyways, that might be something that you could then take to a job, is the thought. And then they'll say, well, what's your assets under management? $5,000. $5,000. And he's like, I'm sorry, did you say 5 billion? 5,000. Oh, did you say 5 million? 5,000. Oh my God, $5,000? Yeah, but it was 70% of my net worth, right? But you should still be able to do it though, right? I mean, it should be. What I have always told you is sophisticated investors want to simply see your returns, including risk-adjusted returns. Risk-adjusted returns through various cycles in the market. And they want low volatility and some sort of return they can count on. Right? That's all. And then you're like, to me, I don't care if it's 5,000 or 50 million. I'd do the same thing, and I would take the same level of risk. And I would make the same types of decisions. I'm very familiar with the seasonality of the Swiss franc. I'm very familiar with all the players at the Swiss National Bank. I track all the import and export, relationships that they have with the EU. So I am very in tune with the ECB, right? And I own a castle in Switzerland. It's very nice. It's not too ostentatious. You'll love it. You come visit, huh? It's fabulous. You'll love it. Yeah. So I don't know. So that's my thought. I've actually scheduled a cigar on my calendar to sit down and ponder this for you guys. I've been trading for 6 months, all right? Don't have much money at the moment, but really didn't get a hang of fundamentals. Oh, well, that's a long question. Let's figure out what I'm going to do with the boot camp side first, huh? Kiwi on the move. Is it? Do we get the? We got the auctions this today, isn't it? Am I right? Why can't I see this? What am I doing? Brain part. The auction today, right? Did we get? It's probably out now, isn't it? Or is it at 10? That's now, isn't it? Yeah. James James is a quant. It's so funny. Southern people with two first names. No, it's funny here though, because I don't want to make a Ricky Bobby joke, but it is fairly common in the South. One of the lead contractors that did a big project on my house just last week. They wrapped up, but he had two first names as well. I have to tell you this though. So they were spray foaming my attic, right? It takes them 8 days to spray foam my attic. 8 days. It's a big attic. My children overheard one of the workers say it's the biggest house they've ever sprayed, and they're like, they called it the Taj Mahal. I'm like, really? That's so nice. But he's funny though. So it's spray foam, right? And you got to wear bunny and masks and everything. But we would have conversations like, so how are we going to deal with this? And he's like, he started answering everything, and all of a sudden there'd just be this weird pause in the conversation. I'm like, whoa, whoa, what was that? How long have you been spray foaming? Oh yeah, over 20 years. 20 years? Yeah, from the chemicals. Anyway, so he had first two names, right? Typical. Here's another great story for Southern. So when I first started, like, I had these conversations about hiring his company to do the attic, right? He's like, "Well, I'm not going to be available this week because I'm hunting." I'm like, "Wow, really?" So he's off hunting for a week, week and a half, because in the South, people own like 300 acres. It's just they own the land that's not developed. They don't farm it. A lot of the time, there's not even a house on it. They just go hunting on their hunting properties. So anyway, so he's out there, and all of a sudden he's like, "Yeah, I was sick. I spent a week in the cabin, which could be very, but it was filled with black mold, and I don't feel so well." Like, he just left a week in a cabin with black mold. It's a South. Don't worry about it. Yeah, but the South is a pretty awesome place to live. There's no doubt. So, the South is cool, but it has its quirks for show. All right. So, anyways, Pig Dog is moving. I thought I was going to bring up Kiwi, but I'm looking at Pig Dog. Look at that. We're slamming into what should be the bottom. We don't know if it is going to be the bottom, but that's supposed to be the bottom. So in a typical move, typical week, I'd probably long bomb this because it's Tuesday and we're hitting the bottom of the week, but it's a monthly M2. Like, that's a buy, right? So we'll see. I mean, we don't know. The stock market might rally 800 points today, and that would be it. We'd hit this bottom and then boom, full reverse dollars week again. So you really need to pay attention to what's happening today, in particular in the stock market, and then follow it through. Like, Asia was great, right? You'll see like a couple of those Aussie trades I took in the Asian session. Like, why this U.S. stock market dropped at one point? It was down 8% or something, wasn't it? But it dropped over 1,100 points, I think, when it closed. The worst one-day drop in ever, which is so funny because it's statistic. We've never been at 25,000 before, so relatively, it's not that it's a bad day, but it's not the worst ever. But nominally, it was the worst ever. So why would you not follow that up in Asia, right? So lo and behold, I traded the Asian session. Really? Of course I traded the Asian session after a big drop like that. So China was down, what was it, 6%? Japan was down 5%. Korea was down 5%. Yeah, Ron says the South's okay. I miss Cali. You know what? I don't miss California at all. Like, at all. At all. I miss Singapore, right? I spent 25 years in California, 25 hours in Singapore. I miss Singapore. I used to think like, maybe I'll move my family to Hong Kong, or maybe I'll move my family to Shanghai. But I was in Shanghai in December. I'm like, it was freaking freezing. It was like -4. And I'm like, I thought Shanghai was hot. This sucks. -4 Celsius. Gee whiz. Right? And I don't think Hong Kong was any better at that time. And then you get to Singapore, and I'm like, it's 10 o'clock in the morning. I'm like, this warm sun. I'm going to sit on the beach or on the chair by the pool. I need a Singapore sling, man. I need one for breakfast, right? Daniel's like, you're having one for breakfast? I'm like, just enjoy the pool, Daniel. Come on. So Daniel and I are hanging out by the pool at Ritz-Carlton, 10 o'clock in the morning. It's nice and warm. It's about, what, 28 Celsius? 10 a.m., nice and humid. Birds are singing, bromeliads on the banyan trees. That's how you live in December. That is a nice December. Daniel's funny though. I'm like, so I do this one lap, take a 5-minute break, and I do this, and I get back to the other side of the pool, and I get out and I sit down. He's like, is that it? You're done? Like, yeah, I'm done. It's like, that's your workout. I'm like, I had to go up and down the ladder. That counts. Meanwhile, Daniel's just cruising. He's doing 25, 30 laps, not a problem. I'm like, yeah, I got to lay out by the pool. So anyways, this Kiwi, huh? Kiwi moving. So you're taking the bounce, huh? Yeah. Yeah, see, I don't want to mess with any of that. But did we get the Fonterra auction reports or not? I always mix the time up. It always surprises me when it comes to. Is it 9 a.m.? Is it 10 a.m.? It's out in 30 minutes. All right. All right. So don't get too caught up in this move. What is happening? What would explain this move? We have a monthly central pivot, and then we have these weekly pivots. Which one would you say if you had to describe this to someone? I might say, you know what? That just might be the monthly central pivot. Fine. But based on what we've seen and what we still don't know. What we still don't know. We still don't know what the stock market wants to do. Remember, that's what's going to dictate all of this. Not your technicals, not even your long-term fundamentals, right? So in economics, you have come on, let me get my draw black. Okay. In economics, you have Y. Y stands for output. Okay. And then you have Y bar. That means long-term potential output, right? So generally, when I'm trading fundamentals, I'm trading something closer to a Y bar. Now, what's happening today or this week or even this month, or we could have a bad quarter. I get it. But it's all part of the thing, right? So you might have an uptrend like this, okay, which one person could be trading, but I'm trading this. And then the technical analysis lets me know, so let me change colors here, when to buy and when to exit. when to buy, when to exit, right? So on and so forth. Buy, exit, right? Buy, that kind of stuff, right? So not to me, what's happening is you're going to get technicals that are going to be choppier than normal because of the additional volatility. Remember, most of our technicals are backward looking. So if we didn't have a lot of volatility before, how are they going to help you predict the volatility now, right? So the technicals could be a little less believable. We don't know, but it might. And the fundamentals, to me, it's the fundamentals have not changed at all. The wide part is constant. Okay. Has profitability collapsed in U.S. companies? No. Has interest, and really, here's what it comes down to: has inflation and or interest, right? So I guess inflation, right? So you got inflation. Do you know the symbol for inflation? Inflation is okay. Inflation, right? Would no, that wouldn't be. No, how would I draw this? Hang on, stick with me, Goose. I got it in my brain somewhere. The interest rate is a function of how would you do this? I guess you'd have to make this a real. Let me redraw this. Let's do it again. Okay, let's do this again. Inflation. No, wait. The nominal interest rate, is a function, okay, of real interest rates and expected inflation, right? The nominal interest rate is a function of real interest rates and expected inflation, right? Did I have that right? Some of you guys are into this, I think. So, if you think the future holds higher interest rates or such, then you could do things to make money from that, right? Or you're better to spend the money today than spend the money tomorrow. So, so if you felt like in 1 year $100 would buy you $95 worth of stuff, wouldn't you just want to buy the $100 worth of stuff today? Ask anyone from South Africa, right? Whatever you wanted to buy today, you should have bought it a year ago. Okay, so it gets to the point where this inflation and the nominal rate, right, and all that kind of stuff, if that eats into corporate profits, right, profits, what's profit equal to? Right? Marginal product of labor times labor. Marginal product of capital times capital. And then you could make this real by kind of looking at, so you have to take their productivity, y over, wages over product, rent over productivity. So it's basically your cost of labor, cost of capital, and then you can do all kinds of things like what about taxes and all that kind of stuff. But basically it's your income minus expenses, right? So what am I trying to babble through? If inflation is high enough, it eats into your profitability in real terms, right? So let's say you doubled your income, but prices for everything in your economy doubled. Are you better off? No. So therefore, you have to measure things in real terms. So even though prices doubled, but your wages doubled, so in reality, nothing changed, right? There, in real terms, nothing's changed. So what I'm trying to say is, if the interest rate has gone so high that it kills all your profitability because the cost of borrowing money, or even the cost of using money, has gone up so much that it kills your profit. Are we at that rate now where in the United States, inflation, wage growth, nominal interest rates are so high a company just cannot make money, even though revenue is flowing through the door? They actually are not profitable because the costs are so high, wages are so high, cost of buying commodities is so high, taxes are so high, borrowing costs are so high, you can't make a buck. No, actually, we're like a long ways from that, right? So, is this stock market a reversal? Did the bubble burst? I would argue no. That nothing's actually changed at all. Right? So, you have our Fed funds rate is quite low, right? And core CPI is quite low. PCE is quite low. Yeah, so John says, so maybe buy a dip for smart money. Well, that's what I'm saying, where you got to be careful in today's market, because if the stock market rallies 800 points today, even though it was down 1,100 yesterday, it could rally 800, and the only thing that happened was all the dentists and doctors and lawyers that bought the stock market in the last month, they're going to lose their shirt, but smart money took advantage of that, and they'll buy them out on the way down. But that's what's been going on forever. By the time your idiot chiropractors dumped 50 grand in the stock market's over. Who do you think's selling them the stock? Yeah, smart money. Okay, so we need to watch that. Are you gonna on witching? It's only February, but you can still call it witching. It's not quadruple witching, but so the third Friday. So that's that, but it doesn't have to be that way. I wouldn't bake that into the cake at all. So what I've always tried to teach you is whatever's been happening, go in with the assumption that it will continue. Stop with this idea of it can't fall any further, it can't go any higher. Stop shorting at the top, stop buying at the bottom. Okay? Go with the trend, and then use technical analysis to say, ooh, a higher high off of that, that reversal pivot point? That's weird in a downtrend. And then start thinking that way. Well, that could create a double bottom or a 1, 2, 3. In that case, maybe a bottom is set, and then I'll take it. So don't be too quick to flip. Okay? And be very open-minded to information, not to people's opinions. You know, watch the stock market. Maybe today you do have CNBC on, and they're like, "Oh, the Dow is down another 500 points in the first hour." Right? Be careful. In that case, you probably want to stay dollar strong, and then all of a sudden just always be aware that even if the stock market opens down 500 points, it could be up 1,000 points before lunch. These are topsy-turvy places, as I've tried to explain. There's a lot of fear and confusion because the retail is now mixed up with these long-term trends. But a professional institutional investor that bought the stock market 10 and 15,000 points ago, they're not worried in the slightest. Not even a little bit. So it's dumb money at the top, and yes, they're losing, all that kind of stuff, but just take this as a normal churn, a rebalancing a little bit, and be open-minded to what just happened could just be over and going the other way in short. So you want to manage your risk wisely, but look for opportunities where if the downtrend does switch to an uptrend, it's probably going to happen at support. And maybe it'll give you a reversal pattern to confirm. So try, right? Here's the thing. Here's the last one I'm going to leave with you. Try to be as smart as you can today as a trader. Try to be the trader you want to be. If you feel like you're just going to throw down a trade and see how it goes, don't. But don't freak yourself out that you don't enter the market either. Okay? Because remember, your job, if somebody pays you money to trade their cash, your job is to take advantage of the situation. You're supposed to make money in this situation. But you're not supposed to lose money in this situation. So you got to be in, but don't be stupid. Don't be overly aggressive. Don't bet against things. Just don't gamble. Have a smart reason for why you're pulling the trigger. And then don't be so relaxed where you don't think this thing can reverse, because it definitely can reverse, especially on this day, the day after, versus next week. Okay? So be smart. This is your opportunity to challenge yourself. Be as professional as you possibly can. Now, Frank, just wait a bit, huh? Well, no, actually, you know what, Frank? Go with FX Bootcamp. That would be the one. The fundamentals one in there. Okay. In fact, I'll be adding a couple of lessons into that. GDP deflator, CPI, core CPI, PCE. All that needs to go in there. So if I say Y, you know what I'm talking about. If I say Y bar, you know what I'm saying about, right? So I don't know what time it is. Yeah, babbled on today. Sorry. But the sun's coming up. I guess we need to move on.com. Well, one, I think I take it pretty slow, right? I mean, right? I go through pretty one step to another step to another step. But I don't think I'd take a macro class first, but maybe after. But I think if you took a university level macro class and you've already taken the fundamentals course, and when they start talking about monetary policy and stuff, you would have that nailed down, A+ kind of stuff, right? The difference between the prime rate, the Fed funds rate, the discount rate, you got that. What's the discount window? You know what that is, right? You know, accommodative monetary policy. If the Fed goes out and buys $100 million worth of bonds, what happens? You know, the difference between like an open market operation and the other two tools of the Fed. You know how a bank manager would manage their balance sheet based on a change in the reserve requirement ratio or a change in deposit at their bank, all that kind of stuff. I think if you went in and then took a university course after the fundamentals, you would nail down the monetary policy stuff first. And that's what I really focus on in the fundamentals. But then what I'd like to add to it is more content specifically on, you know, measuring productivity of an economy. And that would be GDP and that. And then inflation. So therefore you need CPI, PCE, because then if you have too much inflation, you would already know what the Fed would need to do to ensure that they meet their dual mandates. So you're like, oh, well, look at that PCE. I know what the Fed would do because you already learned the monetary policy first. Usually they teach you monetary policy last, but there's a disconnect, I think. So I think you should learn it the other way. So anyways, yeah, so do that one, Frankie boy. Thank you, Juan. Juan, if it didn't suck, leave a good review on Amazon, huh? There's a bunch of trolls on Amazon. So, did Frank even stay? Frank, were you even here for all that whole conversation? Yes, Frank's gone. Failed. I must have said goodbye too early, huh? So anyways, peace on earth. May the pips be with you. May our profits be above average. Was that right? Cool. Thank you, Lester. Well, you know, it bugs me like when people say like, all of this has been written before. It's in every Forex book I've ever read. It's just rehashing of the same garbage. This is all, you know, low level stuff. I'm like, wait, first of all, I haven't read anyone else's book. But second of all, like, I really put my personal, how do you say, strategy or behaviors into that. Like half the book, or no, 1/3 of the book is specifically on how I kept a journal and improved myself as a trader. And I'm like, and there's a lot of neuro-linguistic programming in that. Like, really? Everyone does NLP strategies in their books on how to become a better Forex trader? Do they really? I mean, like, I thought it, if anything, I thought my book would be a little bit unique. So, yeah, well, but so then, like, whoever left that review, I mean, was that a fake review? Because I didn't know my book was exactly the same as everybody else's. I'm like, wow, because I don't think it is. Haters gonna hate, 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 hate. So I shook it off. I shook it off. Yeah, that's right. Everyone has a description like an old man easing into a hot bath, right? Everybody references the Matrix. Sure. I mean, yeah, it's gotta be. I mean, it's weird, right? How many people in a book said when they first started trading as a currency trader that they sucked? And after blood, sweat, and tears, I started to suck a little bit less, right? A year goes by, I was sucking even less more. more or less sucking, I sucked less, more or less, yeah. Yeah, I suck a lot less now than I used to. But who says stuff like that? I say stuff like that all the time. What am I, the world's greatest trader? I'd be a retard to say something like that. So yeah, I suck a lot less now than I did 15 years ago. Yeah. So anyways, and I stand by that. Yeah, I think now I make $1.30 if you buy my book or something like that. Woo! Is that right, Jeremy? You know, well, first of all, I appreciate that. But my coaching has evolved, but the strategy hasn't. But oh, no kidding! At the party, check this out. Yeah, let's see if I can change this. Can you guys see that? This is framed. So there's the invitation I sent out to boot campers for the launch party. I got to move my cup. Hang on. So that's where I signed your book. I threw a party, bought beer and wine for, what, 5,000 people? There's the actual book. Is that neat? And there's a bunch of other stuff on there. But anyways, beautifully framed and heavy, heavy mahogany. Is that cool? Now I have to put it back on the wall. I'll do that later. Yeah. So I signed your book back then, huh? I think the lunch party was in New York, wasn't it? I don't think it was Vegas. Maybe it was Vegas. Yeah. And check this out. I have it right behind here. I've never even put it on the wall. Have you seen this one? The Wiley Trading Guide. You put Daryl Guppy above me. How dare you? You know any of these guys? Huh? Heard of a few? So I have another one in my bathroom. It's framed, same mahogany. So they're all the same mahogany. Another one, it's my license plate from California that says I Heart Forex. Oop. No, you don't have to buy that book. And I think it was only available in Australia anyways. But I remember writing about people being 70 working at Starbucks so that they can get health benefits and they can eat day-old muffins because they lost so much money in the economic downturn and couldn't take care of themselves, when as a currency trader they should have profited. No joke. Who writes things like that? Oh, Ted, heard a few of those guys. Yeah. Yeah, there are a lot of Aussies. So anyways, good reminiscing with you guys. Let me make some phone calls and stuff. See if I can put together this fund for you guys. Will I short it? Maybe. What are you guys going to trade? I mean, you should tell me now so that you're not looking for trades. Why don't you tell me now what currency you're going to trade over the next uh, 5 hours? So I got knocked out of that Aussie trade for 75 pips. So I don't know anything about that, D. But I can tell you everything since I've been trading, the broker's business has constantly changed. Cool. Cool. All right. Well, good luck to you guys. I'll see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average and diamonds in the sky. Huh? Thank you for being a client of TradersWay. Thanks for hanging with me.